Hi everyone, hope you're doing well. Welcome to the NetElixir 2019 Holiday Forecast webinar. My name is Shelby Simon. I'm an account manager here at NetElixir and I will be your host today. Today we're going to go through just a quick introduction of who is NetElixir, the basis of our forecast and methodology, year-to-date data insights, what makes 2019 holiday shopping season different, our forecast, and then some awesome holiday resources. At NetElixir, we are a group of over 130 team members with some really awesome partnerships and clients. I'd like to give a particular shout out to all of our UPSers on the line. Welcome. So who is NetElixir? We help e-commerce brands find and acquire new customers online. That is our core. We offer a few varied solutions for that always take an integrated approach. Those include paid search, organic search, Facebook, Instagram, Pinterest, analytics consulting and conversion rate optimization, Amazon ads, and a full suite of e-commerce development services, including website migrations. Today, I am joined by our founder and CEO, Udayan. He is absolutely fantastic, a much requested guest lecturer, and I highly recommend you connect with him on LinkedIn. I know after today's webinar, you're all really going to want to do that.
Thank you, Shelby. I'm almost blushing. I'm absolutely honored to do the 11th annual holiday forecast from NetElixir. It's a bit of a deja vu because when we started the process in 2008, the US economy had just slipped into a recession. And I still remember our first forecast webinar had total about 32 people attend, because at that point in time, people, honestly speaking, were a lot more bothered about sort of managing the business and just everything was sort of falling apart. It's incredible. In the last 11 years, we have now really sort of done this based on the data. And our method has changed a little bit, but overall, what we really base our forecast on is just an ongoing analysis of e-commerce and search engine marketing trends and very specific metrics for our customer base. So these are all of our clients. We work, as probably most of you know, we work exclusively with retailers. So all of these are mid-size and large retail clients. And during the holidays, typically, again, we are defining holidays a little broader than it normally should be. But first, November to December 25th, their overall revenue, the website revenue, would amount to a little over $500 million. So almost $500 million in terms of online holiday revenues. It would directly come from about 300 million plus unique visits forecasted primarily for the upcoming holiday season as well. And the key categories that we are focused on are all holiday-centric categories like gourmet food, apparel and shoes, home and decor, gifting, and consumer electronics. And as I mentioned earlier, this is our 11th holiday forecast. So a little deeper in terms of as to how do we really come up with this model and what is the methodology that we have been using. So we use actual week-wise website visits, website sales, the overall channel-wise investments or how much you are spending on each channel, the cost per click data. And based on these primary variables, we really have built a set of metrics, which essentially are more of the calculated metrics and calculate them on a weekly basis, starting the first day of each year. So it's an ongoing sort of a rolling process that we have really continued since 2008. The above data essentially, this mostly started in 2014, 2015. We are segmenting it separately into mobile and desktop data as well. And we normally try to conduct a comparison between this year versus the previous two holiday seasons, which would be in this case 2018 and 2017, because it really gives us a frame of reference as well. We separately analyze the key holiday metrics for the year and compare the same to the previous 2 years. I already mentioned that our forecasting model has significant weightage, and this is an important one, greater than 15%, which we place on the back to school. And this is interesting. I mean, since 2008 we started, we have seen that back to school sales are a pretty strong indicator of as to how the holiday sales will be. And that has more or less, with I think the exception of maybe 1 year that I can think of, 2012, more or less that has really been the case. So as a result of which we initially in our forecast when we started in 2008 to 2012, back to school had about a 20% weightage. We reduced it to about 15%. And that somehow coincided with a small company called Amazon launching something called a Prime Day in July, because that really skewed and changed a lot of the things as well. We have since 2015 included the Amazon data as well, because as we know that now the overall online sales is very clearly has two parts. One is the amount that you are selling on your website, and the second is that the amount that you are selling on marketplaces like Amazon. So our information also includes a little bit of an Amazon sales data weightage as well. Our model also places a lot of weightage on the previous prior year holiday trends. This is probably more of an extension that we have seen, that consumer behaviors normally in consecutive years don't change dramatically. And as a result of which, we have found that typically the purchasing patterns, etc., there is no dramatic change. But if I were to compare, let us say 2019 with 2015, there would be substantial change. But year on year, we have found that the change is not as dramatic. And as a result of which, the previous year results actually have a 20% plus weightage in our model as well. I'll be happy to answer any question. I know a lot of our analyst friends have chimed in from large companies. Welcome to all of you. I would be more than happy to answer and address any of your questions. Feel free to email it to me directly. My email address is known to you probably already, Udayan, Udayan @netelixir.com. Moving on, let me start with YTD 2019. And when I say YTD, I'm really looking at Jan to August 2019, some of the data insights. So overall, I think the year started strong. Let me explain this table or this graph. So in Q1 2019, by the way, the blue line stands for revenue. The orange is orders and the yellow is average order value. And what we are trying to do is we are trying to do a quarter by quarter comparison between 2018 and 2019. So as you can see in Q1, we started strong. We had a year-on-year growth of upwards of 20%, which was higher than what we actually had in Q1 2018. So it was a more robust growth that we observed in 2018, which was roughly around 18%. The orders were slightly higher, but primarily because the AOV was a lot more positive, we saw that the revenues grew higher. Interestingly, that year-on-year growth line, as you can see, the blue line again, that came down quite dramatically in the second quarter, and specifically the month of from mid-May, let us say post-Mother Day and June as well, were relatively more or lower compared to what we had predicted or forecasted to be. So as a result of which, you see a slightly more sort of a muted overall numbers for Q2. And this is all actual results, as I mentioned, based on our own client data set. July, August, that number came down quite dramatically. And that's what I think was a big red flag for us. When we analyzed, this was across categories. It was not really confined to any particular category as such. So all the 5-6 categories which are included in the data set, basically we sort of saw that. You would see that the reduction was as dramatic as July, August 2018 was roughly about 15%, but that came down to as low as about 6% in July to August 2019. So that was a quite a big red flag for us when we sort of just started working on this model. And I see a lot of questions already getting sort of posted there. I can assure you that all of the questions would be answered at the end of it. The back to school results have been also below expectations. This is the comparison of the back to school revenue numbers, orders, and AOV, essentially between 2018 and 2019. So in 2018, we had a 17% year-on-year growth during back to school. That fell down to 9% in terms of revenue this year. The orders came down from 14% to 7%. The only, I think, the bright spot in the entire thing was the average order value, which actually had fallen in the back to school last year by 4%. That went up. So 2019 versus 2018 went up by about 3%, which I think was as I mentioned, the only shining spot. So those are some of the red flags. As I mentioned, that with the 15% weightage in our model, understandably, we put a lot of emphasis on the back to school numbers, and unfortunately, they have been a lot more muted compared to what we had expected them to be. Moving on, some of the key e-commerce trends. We We have quite a few retail clients in our data set, essentially who sell on Amazon as well as sell from the website as well. So we have seen that the contribution of Amazon-led sales to their overall online sales have gone up from 12% to about 15%. So 12% was Q4 2018, that went up to 15% if you really look at the YTD numbers. So people are selling more on the marketplaces, more on Amazon marketplace in this case. The mobile devices drove over 44% of total website sales. Now again, this varied from industry to industry. In an industry like, let us say, beauty products, or in an industry, women's apparel, we saw that percentage being higher than 60%. But in some of the other categories, it was, let us say, gourmet food was not really as high. So about 44% of the total website sales would be driven only from mobile devices, or let us say mobile visitors or mobile searches. Online sales are getting increasingly centered around events. Something I really wanted to highlight. So we did an analysis for all of the clients, and we work with quite a few gifting customers. And for some of these gifting customers, Valentine's Day is a pretty big day. Mother's Day is a pretty big day. Father's Day is pretty big. So we were intrigued to see that a significant chunk of purchases essentially happened, let us say, plus minus 9 days, or I would say minus, it's basically minus 9 days, essentially, of that particular holiday. Let us say Mother's Day, whatever it was, 9 day prior, really we sort of saw the first sales spike. And the majority of the sales, in fact, we had done a webinar back in the month of June on the Mother's Day as well. And where we saw that the majority of sales upwards of 65%, which is quite substantial, because we were able to track back to the Mother's Day search queries, happened during those last 9 days. So people essentially, apparently, I mean, one of the hypotheses we came up with, there may be a possibility that a lot of customers are really holding back or waiting, expecting a strong promotional offer prior to the holiday, and they are sort of holding back in terms of placing the purchase. Now, admitted, I mean, both Valentine's Day and Mother's Day are very specific single days, so it may not be entirely. I mean, we can't probably entirely extrapolate it to holidays, but I mean, we would still think, or I would at least still think, a significant chunk of the purchases probably still would be fairly localized on very specific days or centered around very specific days. So I mean, Black Friday, Cyber Monday is strong. It will be stronger or bigger this time. Green Monday has been strong, and it has been increasing in importance over the years. That will be very strong as well. And then there is one more period which would be very strong, which I'll not divulge now. Do a little bit of a teaser out here, but I'll sort of divulge at the end when we discuss our holiday marketing calendar as well. So some of the key e-commerce trends. Amazon obviously continues to increase its dominance. I mean, we believe that more than 65% of all the product searches now are happening only on Amazon, which is huge. So Google, take note. I know we have friends from Google joining us on this webinar as well. So 65% plus of all the product searches happening on Amazon is pretty big. The percentage of all search queries which are led through sort of voice activated searches, let us say, that keeps on growing, and we estimate that percentage to exceed 35% of all the mobile search queries this year would be voice activated. So which is substantial, 1/3 of all mobile search queries. And if you really consider the fact that mobile searches account probably for about 68 to 70% of all the searches and 44% of all the orders, as I mentioned, you're talking about 70% times 1/3. Is quite a substantial chunk of 23 to 24% of all searches are being voice activated. So, I mean, you obviously need to have a plan to really sort of thrive in this changing search ecosystem. Primary channels like Google, Microsoft ads, as well as Facebook, and of course Amazon ads as well, they are all applying AI to really help marketers succeed. And as a result of which, I mean, we are very clearly in an era of anticipatory marketing. Anticipatory marketing, where marketers probably have enough data to almost like pre-make decisions which about your buying behavior. And which is interesting, the result of this is the ad copy or the ad messages get a lot more personalized. They are able to almost forecast as to what you are most likely to buy and so on. So very clearly we have seen, I mean, it was pretty apparent last year as well, probably the last 3 years almost now, that the sophisticated marketers are using a lot of the strong consumer journey or customer analytics data to really sort of personalize their entire advertising effort. I mean, some sort of a thing which we call the anticipatory marketing. And data is becoming the massive differentiator. That's almost like creating a bit of an inequality, or almost like a polarized retailer or advertiser market, wherein either you have super sophisticated advertisers who are really taking the entire process of anticipatory marketing to a different level, or you have the others who are struggling big time because they are still not really using as much of customer analytics to really run advertising programs a lot more impactfully as well as responsibly, I would say as well. Marketplaces are the biggest drivers, as well as winners, obviously, of the e-commerce growth. I mean, this year, I think I'm not really saying anything new. I've been per Mary Meeker's report, which came out just a couple of months back. I mean, 16% still of the entire retail sales is accounted for by online, right? Despite all this hue and cry, the huge projections that we do, still online sales is just 16% of the entire retail sales. So think as to what that probably should give you an idea of the magnitude of the market as well. Per eMarketer, I know we have Andrew from eMarketer joining this call as well. So eMarketer projects that this percentage would go up to as much about 22% in the next few years. But at this point in time, and marketplaces definitely are really sort of winning this particular battle quite substantially. One of the questions which obviously I'm very sure that most of you, if not all of you, are sort of very interested in, is how big would Amazon's share be during this holiday season. Now, Amazon's share, we forecast it to be 44% of all online sales which happens during this holiday season. 44% would be grabbed by Amazon. That's a pretty remarkable number, right? So if total $100 are spent online, Amazon would grab $44 out of those $100. So that means all the other e-commerce companies or web retailers, let us say, aggregate would get 56% and Amazon itself would get 44%. That itself should give you an understanding as to how polarized this entire market is and how much it is sort of getting skewed, and it is increasingly getting skewed in Amazon's favor. So I have this in this graph, we have tried to map out Amazon's share growth since 2014. And as you can see, in 2014, the percentage was 22%. So essentially, in a period of about 5 years, they have doubled their share of market. Now, we must remember that during these 5 years, the overall e-commerce growth on an average has been anywhere between about 12 to 13%. Just think as to how much of those incremental revenue or spend that has been really done by the customers is really going into Amazon's pocket. So that's, I think, is a pretty good indicative as to how much. And obviously, I don't think it would come as a surprise as well. The 125 million plus Prime members are driving this. It's huge. This graph is taken from the FeedVisor 2019 Consumer Behavior Report. I mean, as you can see, the Prime members tend to be exceptionally loyal, and they, in many cases, buy only from Amazon. A significant chunk buy only from Amazon, and that is really sort of driving much of this huge growth, which is sort of really happening, and sort of Amazon getting a higher share of the entire pie. How should you be thinking about your search marketing program? I mean, NetElixir is known for being holiday search specialist, and that's what we have done for the last 15 plus years now. So understandably, there's a lot of question. This is a very common question that we get asked. The first one, interestingly, but probably not too much of a surprise, would be you can't afford to ignore Amazon. I mean, I don't think I really need to emphasize this. All the data points that Amazon ads are no longer an option. That's almost like a must. So the second one is create a voice search SEO playbook. I know a lot of the marketers are still struggling to figure out voice search. While you are struggling, you know what? 1/3 of all the mobile search queries are already happening voice activated, right? So the end consumer, essentially, their adoption of voice search is happening as an exponential pace. So unless and until you start moving now, pretty much not today, now, and really sort of have a playbook which really ensures that when someone is sort of doing a voice activated query, at least your ad comes up, or maybe your listing comes up, because there is no ad. I mean, your listing comes up. That becomes almost like an imperative one. So if you have not really planned anything for voice SEO, I mean, do that today. Product listing ads are expected to drive 65% plus of total paid search. Now, product listing ads again have been growing enormously. Multiple reasons behind that. I mean, maybe the entire visual component of product listing makes it a lot more appealing in terms of click. Product listing ads are also a lot more specific, so you can get to the very specific product very quickly. Most importantly, in my opinion, I think the product listing ads really have thrived in the mobile world. So when you really look at mobile, you have very less time compared to when you are, let us say, searching on desktop to really make a decision and take, or almost like take an action, right? So product listing ads really have been boosted, or their popularity has really got a boost. Also from the fact that the mobile adoption has increased over the times as well, quite substantially. But net, I think it's fair to say that unless and until you really have a strong PLA strategy, I do not think you will be able to compete when it comes to paid search. So just by focusing on text ad wouldn't help. I think, PLAs are a necessary component of your success and your growth driver as well. And the last part is more of a local plus mobile searches. I mean, we would very strongly feel that there is an opportunity for local plus mobile to have a big impact, especially if you have brick and mortar stores, and you can literally sort of run location targeted ads to capture those in-store signups. So all of these are very specific mechanisms which really are evolving as the consumer behavior evolves, as Amazon becomes more dominant, as the percentage of mobile plus voice search queries increase, and so on, and the PLAs become more popular as well. I mean, we'll be more than happy to sort of schedule some meetings with our experts on each one of these topics, but each one of these topics is very pertinent and very important for anyone who is advertising, or anyone who has really an aspiration to do well when it comes to search advertising, whether it is SEO or SEM or Amazon ads this holiday season. What makes the 2019 holiday season different? So I know I am just holding off to my mentioning our forecast upfront, but I really wanted to emphasize a little bit of a context as well, because in certain cases, without a context, if you are just sort of spitting out some forecast, it may not really have adequate amount of thought process behind it. So I really want to share with you as to what are some of the things that our team considered at Retail Intelligence Lab at NetElixir to really come up with this forecast. Now, there are, I think all of you who have joined the webinar know that there are 6 fewer days this time, or this year, between Thanksgiving and Christmas. Now, as you can see, this is from 2012, the Thanksgiving days. Now, the only other year in the recent past wherein the number of days were so few between Thanksgiving and Christmas was in 2013. So understandably, we really wanted to go back and analyze the data from 2013 in an aspiration that probably some of those trends in terms of consumer buying behavior may not really change dramatically. Maybe there is something that we can learn from there, and so on. So these are actually the characteristics of the 2013 holidays. And we have really sort of used our internal database to find out this information. So this is entirely 2013. So let us just transport you back to 2013. And the week-wise revenues, as you can see, 2013 versus 2012, 11/28 to 12/1, pretty much the first few days. 17% of the entire holiday sales was done. Again, when I mention holiday sales, I'm talking about the entire online purchases or online sales between Thanksgiving and Christmas. So 17% was done in 2013 versus 33% in 2012. In 12/2 to 12/9, 32% was done versus 24% of the entire holiday online sales, which happened in 2012. 12/10 to 12/17, that number went up to 33%. And lastly, we sort of ended at about 18%. So helps you understand the skew, right? So you had a significant chunk, probably almost 80% plus, which really happened effectively in the month of December. Now, interesting part is the website sales in 2013 were almost entirely from desktop, because mobile was, at that point in time, mobile contribution to the overall sales was negligible, if any. Amazon's estimated share of total US online holiday sales was less than 22%. So Amazon was a lot smaller at that time in terms of its percentage weightage or the percentage share. And the online sales on Thanksgiving Day were also less than 2.8% of the entire season, right? Though more and more merchants were starting their Black Friday promotions early, but still that trend of Thanksgiving being a major holiday had not really started. I mean, major in the sense shopping day had not really started yet, or yet to sort of pick up to that level. Now, if I were to go back to 2018, because 2013 is 6 years back, right? So now let us get back to next year. Last year, 2018. Primarily because, as I mentioned in our model, the previous year almost always has a pretty big weightage to the entire forecast. So the week-wise revenue split was this. So 34% really happened in the month of November. Now you must understand that November we had both Cyber Monday as well as Black Friday and Thanksgiving. Everything was there essentially in November last year. 12.1 to 12.8 was 20%. It sort of came down. Look at the last section or the last week, which is 12.17 to 12.24. So 22% of all the online holiday sales essentially happened only in the last week. Now I'll go back a little bit. I'm sort of toggling back and forth, I know. But just compare it with 2012. The 2012, the red number in the last block was 17%. So understandably, there is a significant chunk of purchases which are getting sort of done in the last week. It was earlier 17% in the overall contribution. That number has substantially increased to 22%. And we believe very firmly that a big driver of this is the mobile plus local combination. So mobile, as you can see, drove about 42% of the online sales last year. Amazon's estimated share was roughly around 40%. And online sales on Thanksgiving were 5.3% of the entire season. Now let me go back again to 2013. So that was 2.8% of the entire season. That has almost doubled to 5.3% of the entire season. Now, before I sort of get into as to what would be the weekly skew, I really want to just do a bit of a poll at this point in time and see as to what your answers would be and what you feel about it. So the question is, what percentage of the total online holiday sales will really, in your opinion, happen in the month of December? So let us say between 1st December to the 25th of December. I see the numbers sort of going up, back and forth, but this is like what percentage of the total holiday online sales will really happen in the month of December is the question. So we have 18% of the attendees today. They gave 80% or higher, 36% mentioned 70%, 25% mentioned 60%, and remainder mentioned 50%. Now let us go on to the next one and let us see as to what our projections or the forecasts essentially are. So our predictions for 2019 holidays, this is a week-wise split, essentially is 80% of your online holiday sales will actually happen in the month of December. 11/28 to 12/1. Again, a big reason is the few number of days. Even the Cyber Monday happens to be in December this year. Only 20% would happen in the month of November. The first week would be pretty heavy, 12/2. But again, Cyber Monday is a big driver of that sales as well. So 27% of the total online holiday sales would happen in the second week. The third week would account for about 30%. But look at the last week. We very, very strongly believe that 23% of all the online holiday sales, remember this is like all online holiday sales, would actually happen from 18th of December to 25th of December. Now the fundamental question, I know we have many friends from UPS join us today. Thanks to all of you for joining in and listening on this. I think logistics, is one of the key components because, unless and until you are able to ship it so as to be able to make it on time, so that's where I think that just keep that factor in mind because you may not really be able to influence or dramatically change that skew primarily because consumers will buy when they want to buy. So that's, I think, one of the things which we really wanted to highlight. We also believe that mobile will drive over 45% of all online sales, and Amazon's share, I think we have already mentioned this earlier, would exceed 44% during this holiday season. Moving on, now getting to the core, the real, the part for which many of you really have sort of joined this webinar, is we get to our holiday e-commerce forecast. What is the year-on-year growth? And we are predicting a slower than usual growth this holiday season. We are predicting a 9% year-on-year growth. This incidentally would be our most conservative prediction since 2010. So it's probably the first time that we have come up with a 9% year-on-year growth. Contributing to this, one obviously is a fewer number of days, but also based on the recent live data analysis that we have done from specifically the last 3-4 months, where we have, and I sort of shared with you the charts, where we have seen progressively in Q2 as well as July, August, the overall growth really sort of tapered down. We take a conservative approach in terms of with the holiday forecast this year of 9%. The order growth would be 11% is what we are forecasting, and the revenue would be 9%. That means that average order value actually would go into a negative this year compared to the previous year. And the big reason we believe is there would be an intense price competition, specifically in the certain holiday time period. So I discussed about the importance of events as very specific sales days. So we would see tremendously competitive, almost like a pricing behavior during those specific days, like Cyber Monday and Black Friday, probably Green Monday, even the last few days for shipping, and so on and so forth. That's the reason it will lead to a lower, the retailer sacrificing margins quite substantially just to really not lose market share. Again, it is a muted growth. Again, this is our forecast essentially since 2013. As you can see, the most conservative forecast that we have done pretty much in the last few years, 9%. And I think I have sort of been able to share as to what are some of the recommendations. I mean, now there are a few things which, again, just to help you understand as to what it means, specifically in 6 fewer days. If you're looking at a 9% growth, now 6 fewer days just to even stay level or at par, let us say zero growth compared to 2018. On an average, a merchant or a retailer would on an average have to sell around 18 to 20% more, or get 18 to 20% more orders on a daily basis. Again, I'm just doing a very broad average in this case, primarily because they are 30 days, 6 divided by 30 is 1/5 of 20%. So 20% more just to stay afloat. And we are projecting 9% growth. Again, we feel very strongly, and it would be skewed significantly because of Amazon's growing dominance and their use of data analytics to really make their marketing a lot more clinical in terms of precision. So I would think the overall share may get fairly lopsided, primarily because 9% can be for the overall market. But when it comes to only individual mid-sized and even large retailers, and obviously the small retailers, they really have to work very hard, work very, very hard to really get or realize a growth this holiday season. We have the second poll. I think this is a little bit of a self-brag as well, but I think we can do that because we have the actual data from NRF essentially to validate against. I mean, between 2013 and 2018, any guesses as to how many years our forecast essentially matched the NRF actual numbers? And we have the actual numbers now primarily because NRF releases that essentially in the month of January. So we can really compare it essentially with the actual numbers. I know, as I mentioned, it's a bit of a self-brag as well because we are pretty proud of the model that we have built. Again, that probably is an indication in terms of as to what some of the answers would be. 61% have guessed it right. It's like 4 times or greater. I mean, in the last 6 years, our forecast, and if you really tally that with the NRF's actual forecast, has been exactly sort of accurate. And that's, I think, one of the reasons why we are very confident of the model that we have been using, essentially. And 61% of you really sort of voted it right. So thank you very much again for your polling or polls. And so I'll just get to at the end of it, just sort of quickly wrap up with a few pointers or few factors which will drive a 9% year-on-year growth. I mean, The first one is the mobile shopping will continue to surge. So you must understand that mobile reduces a lot of the friction, right? So I think it really creates a lot easier flow. It really almost like creates many more buying occasions and opportunities a lot more seamlessly. Now, mobile plus voice, again, which is the third point in this case, is even more friction free. And as a result of it, these two factors we are depending on still to drive that growth that you are seeing. Better integrated fulfillment would play a pretty important role. So I know buy online and pick up in store has been growing as a percentage. We expect that to grow even further. And given the skew that we are predicting in terms of the overall sales happening in the last week, this would be a very important driver, the buy online, pick up in store. And the last but not the least, I mean, this is something which retailers would engage in or have to engage in to just even stay at par compared to the 2018 online sales they had, is heavy discounting, which would impact their margins understandably. But I mean, if you don't want to lose the market share, you really have to have getting. Some retailers may actually even choose to probably sacrifice shares, but not really sort of discount and give up on margin. That's a perfectly fine strategy as well. But we understandably, because 6 fewer days, the competitive intensity is going to be a lot higher, and to really get that same volume as you got last year, you really have to engage in discounting, which really would impact the margins. The biggest almost like a headwind that we believe has really hit us or hit the e-commerce numbers in the last 2 months, primarily, as I mentioned, I mean, maybe post Mother's Day around May 20th up till now, essentially has been a lot of the uncertainty around the macroeconomic and the geopolitical factors as well. In fact, this is a paragraph I took from the very very well acknowledged and acclaimed newsletter, the Robin Report, where a handful of unprecedented phenomena like the grinding trade war with China and the Brexit debate, etc. It's really inflicting a lot of pain on the global economy. I think that's where I think we believe can be one of the major factors, in fact, which is leading to things slowing down a little bit. Now, interestingly, I mean, we have normally seen, since we are tracking online sales, and I think most of you know that 70% of US GDP is directly sort of consumer led, right? So from that perspective, we have found those correlations between the economic factors and the end consumer behavior. I think is a very direct correlation, which really helps us to make these predictions for that 9% forecast, or a muted forecast this year. So in summary, we are predicting a slower than usual holiday season with 9% year-on-year growth in e-commerce revenue, 11% growth in e-commerce orders. The Amazon's share of total online holiday sales will likely exceed 44% this year. The mobile shopping will continue to surge, and we expect it to cross 45% of the total online sales this year as well. I'll just end with two resources. I'll sort of take you through one of the resources, and I'll sort of hand it over to Shelby to sort of help you with the second resource. I really wanted to share the search marketing calendar. Now at NetElixir, we are known to be fanatically analytical and really in terms of helping businesses succeed, because understandably in a competitive season like this, every day counts. I would probably do a little hyperbolic if I say that every hour counts, literally, in this case. So this calendar, again, we have published this since 2012. We have tried to categorize the different days based on CPC, or cost per click, and I'm focusing primarily on the search metrics out here, as we call it the search marketing calendar, or the PPC data. So in this, the green is moderate, so where we are expecting essentially a desktop inflation and a mobile inflation of 12%. High is obviously higher intensity of competition, and PPC being directly a demand supply situation, the CPCs will go up further. So these days we have tried to map it based on all the prior data that we have access to, based on which would be the green days or less competition, which would be the orange days, slightly higher competition, and red days, which are the most intensely competitive days which are out there. Now, these are some of the things I would very very strongly urge. We have many of our retailer friends many of our customers join us today on this webinar, I would very strongly request you to not just use this calendar, but have a collective meeting where your logistics team, your finance team, your IT team, everyone can be sitting with the marketing team and discussing as to what is your plan. Because this can help you not only in terms of marketing more effectively and probably gaining an edge in such a difficult competitive season, but it can also help you plan your shipping schedules accordingly as well. And that's, I think, one of the definite to-dos that I would probably request you to do. Now, that's what I had. I know we have a bunch of questions that I can see, but before getting into questions, we have a very special offer as well, which I would also love for Shelby to share with you.
Thanks so much, Udayan. So as Udayan said, there are 6 fewer days in the holiday calendar this year, and we really want to make sure that all of your businesses are super ready. To do that, we're offering a 30-minute consultation with our in-house digital marketing experts and also our good friends at Google. In these, we're going to provide some really valuable insights that are uniquely tailored to each business and industry, as well as a customized holiday search marketing blueprint. And that will have recommendations that will help you maximize ROI, not just be prepared for the holiday season. So we're super excited about getting all of your businesses really ready for holiday 2019. And I really encourage you to check out this URL as well as netelixir.com/holiday audit. So /holiday blueprint /holiday audit. Check out both. Really recommend it. It's going to be hugely instrumental to getting ready for holiday 2019. And now I'll turn it over to Udayan for questions. I also wanted to let you guys know I have a surprise in that one lucky winner today will get a surprise holiday gift by not only attending, but also participating. So please ask all of your questions because we really look forward to that surprise.
Fantastic. So I have one question from Sharon. Is this percentage of total revenue, orders, etc.? This actually is, I mean, we have the different parts, Sharon. So we have in this chart, what is the year-on-year growth in terms of the percentage revenue? So last year versus this year, then we had percentage orders as well and so on. So it's percentage average order value also. So yeah.
We also had one question from Mike, and Mike wanted to know, is the forecast low because there are 6 fewer days?
That's a great question, Mike. Now, I mean, that's probably very obvious to sort of ask, but other than 6 fewer days, which obviously puts a lot of pressure in terms of trying to sort of get those extra sales every day, we believe that those macroeconomic and the geopolitical factors are playing a big role. And as a result of which, the recent data that we have analyzed from the back to school, let us say, as I mentioned, around 20th of May up till now, has been slow. It has been a lot slower than what we had initially anticipated it to be. So it's a combination of both. I think a little bit of an uncertainty as well as obviously the 6 fewer days. But a great question, Mike. Thanks.
Thank you. I also have a question here from Wendy, who's looking at also the 6 fewer days, and she wants to know, do we see more customers doing their shopping early, before Thanksgiving, or waiting until the last minute, right before Christmas?
Hopefully the calendar that I've shared, Wendy should have shared, helped you understand a little bit of the skew. But we believe this year there is a high likelihood that some of the Thanksgiving or the Black Friday promotions, or probably pre-Black Friday promotions, would start even earlier this year. I mean, when I say earlier in the sense, earlier compared to the Thanksgiving day. So we expect probably around 24th or 25th, probably the promotions to start in many cases. We somehow feel that the promotions which start early are more likely to be very specific product or category based promotions rather than the overall website promotions. But that's just basically our assumption. But we think that yes, the promotions would start early. At the end of it, we would also see creative retailers, and I use the word purposefully of creative retailers, they would be switching the promotions creatively so as to not give up too much on the margins and at the same time garner an adequate amount of sales. So one of our recommendations very specifically on this part would to any retailer be identify as to what categories are really the most profitable ones for you and how does the competitive intensity look if you really map through the entire calendar. Does it really make sense for you to do a site-wide promotion, or should you really sort of focus only on very specific categories on certain days? Maybe on the 5th of December, you have a promotion, let's consumer electronics, on a certain HD TV, I don't know, 40 inches, and then sort of just switches on to the next day, digital cameras and so on and so forth. But I think there is a lot of creativity at play which I think a lot of merchants would be using this year as such. But yeah, there would be a difference in the skew. We'll have prior promotions starting early, as well as we'll have some last minute promotions as well, which primarily the brick and mortar retailers would utilize it because of the local plus mobile advantage and having the brick and mortar store advantage as well. But great question again, Mindy.
All right, well, that looks like the conclusion of all of our questions at this time. Thank you all so much for participating. I'm sure you all feel so much more ready for the holiday season. Again, check out those URLs. We really look forward to speaking with a bunch of you further about Holiday Readiness 2019. Thanks so much.
Thank you, Shelby. Thanks everyone for joining, and wish you a very happy holiday